Today, I'm going to present a brief overview of the global and MENA M&A markets, which hopefully will set the scene for you for the panel discussions later on. Okay, so I categorized my presentation into three sections. I will start with a brief overview of the economy and economic outlook and confidence. Then we'll talk a little bit about the M&A market dynamics, and I'll finish off with some pointers on M&A appetite and outlook. A lot of what I will be talking about is actually based on the results of EY's 10th Global Confidence Barometer, which is a semi-annual survey that is conducted by the Economist Intelligence Unit on behalf of EY. The survey respondents comprise of 1,600 C-level executives from Fortune 1000 size companies from around the globe. As I said, we'll start off with the economic outlook. In terms of confidence in the global economy, as you can see in the slide, the 60% of global executives believes that the economy is improving compared to 51% a year ago. MENA respondents were actually also very positive about the global economy, with 61% saying that the economy is improving, and this was up from 32% 6 months ago. And this was around the time of the US government shutdown, so that's probably why the percentage was low 6 months ago. In terms of the MENA markets, respondents were even more positive about the MENA economy, with 74% of the respondents expecting the economy to improve compared with only 61% a year ago. More interestingly, on the slide, I thought that there's only 3% that feel that the MENA economy will contract, and this is down from 15% 6 months ago. So this is also evidence that the sentiment is improving. In terms of the key financial indicators, executives seem to be more bullish about the market conditions in general. Economic indicators like corporate earnings, availability of credit, short-term market stability, and the stock market outlook have been increasing year on year, which in itself is evidence that the recovery is real. In MENA, executives were even more upbeat again about the local prospects, with 78% of respondents being positive about corporate performance compared to only 57% 6 months ago. Similarly, 60% of respondents were optimistic about company valuation. This is a significant improvement from last year, where the number was only 44%. This slide shows megatrends that are affecting business and acquisition strategies. It seems that executives believe that what we call the future of work, which includes the skills gap, competition for talent, and differences between employee and employer expectations, is the largest trend affecting business and acquisition behavior. Also, the shift in economic power to emerging markets and the digital transformation were also key trends that were highlighted by the respondents. In addition to all that, 1/4 of MENA respondents highlighted the role of government in the economy as one of the key trends affecting and shaping businesses in the next 12 months. This is because there's a very large debate in MENA in many countries, what should the role of the government actually be? Should it be the regulator, and should it stand back from actual investment in the economy and the interferences, and how much should it interfere in the economy? And so this seems to be a very big concern for a lot of investors or executives. In terms of job creation, globally, employment seems to lag behind the economic recovery. because spare capacity and cautious outlook seem to be contributing to the slowdown in job creation. In contrast, in MENA, 54% of executives anticipate increased job creation, and this compares to only 49% 6 months ago. This slide shows some of the key economic risks that were highlighted by executives, and it seems that the two largest risks agreed upon both by global and MENA respondents were the increased global political instability and continued slower growth in emerging markets, especially in China. Proper management of the tapering process so that it does not affect economic recovery was also outlined or highlighted by a number of respondents, specifically in the US. Talking about M&A dynamics and trends, if we look at the slides, we start off from the left side. The peak in terms of value and number of deals was in 2008. Then this dropped significantly as a result of the financial crisis. Since then, the number of deals recovered from the bottom of the crisis to a range of 90 to 120 deals per quarter. However, the total value of the deals remained lower than before. And this is mainly a result of more realistic valuations on the one part, and also smaller deal sizes, and specifically in certain countries. Both deal numbers and deal value dropped in the first quarter of 2014 when compared to the first quarter of 2013. If we take a deeper look into the numbers, we notice that for outbound deals, the number remained stable at 33%. However, the deal value increased by 32%. The target markets for outbound deals were mainly the UK, Turkey, France, and Italy. The largest deal that happened in the past year was the acquisition of Royal Dutch Shell by the Abu Dhabi Investment Authority for about 2.2 billion. In contrast to that, for both inbound and domestic deals, the number of deals decreased by 18% and 28%. However, the value of deals decreased by 87% and 73%, which is really significant. Which means that in MENA, actually, the deal size has been much lower than before. The main target markets for deals in MENA, domestic and inbound, was the UAE, which accounted for the largest deal values, Egypt, Saudi Arabia, and Kuwait. In terms of deal financing, globally, there was a dramatic decrease in the use of debt to finance acquisition, and this is mainly to maximize returns. The number of executives who considered debt as their primary source of financing rose to 45% from 30% a year ago. In MENA, the trend is reversed. 69% of executives prefer cash to finance future acquisitions. Globally, companies are still focused on growth, with 40% of executives planning expansion in the next 12 months. Cost reduction and operational efficiencies were next at 37%. And this was a major lesson that was learned from the financial crisis, because now investors look for better deals and also for stronger validation of higher valuations. And cost efficiency is one way to do that. In MENA, 47% of executives say that their focus in the next 12 months will be on cost reduction and operational efficiency. This is a sharp shift from the results 6 months ago, where only 22% of the respondents said that their focus will be on cost efficiencies. Still, nearly half of the companies plan their growth will come from acquisitions. Nearly 43% of companies in MENA also expect that their growth will come from acquisitions. As I said, MENA executives are overwhelmingly upbeat about the outlook for M&A actually in the next 12 months. 75% of executives expect improvement in M&A activity over the next 12 months. A new market entry and improved profitabilities are also seen as the key acquisition drivers for these respondents. At the global level, the propensity to acquire was actually consistent among the sectors. In MENA, companies in the automotive, life sciences, mining, and metals industries reported the highest appetite to acquire. One reason behind the positive outlook for M&A is the fact that over 40% of respondents experienced less than 10% valuation gap or no gap at all. And this is definitely a good reason for the positive sentiment that it seems to be happening, because previously one of the main risks of the acquisitions or the main issues that acquisitions dealt with was or suffered from was the high valuations. The majority of global and MENA respondents expect valuations gap to be the same. However, for MENA respondents, 39% even anticipate a contraction in the valuation gap going forward, which is really good news. At EY, one way we help our clients narrow the valuation gap is through what we call the value bridge. This is an integrated way to help our clients understand the components of existing and potential value, which would help each party understand the boundaries of its values. And this will help them get a conclusion to the negotiation much quicker. Thank you very much for your attention. I hope that you will enjoy the rest of the session, and I look forward to talking to you in the break.